What can we expect for real estate in 2024? I'm Kathy Fettke, and I'm here for Bigger Pockets on the Market YouTube channel presented by Fundrise. And I'm here in Scottsdale, Arizona for the IMN Single Family Rental Conference, where there's a whole lot of fund managers, there's single family rental operators, property managers, flippers, all kinds of people here, and I'm going to interview them to see what they're planning for 2024 and if they're concerned about a recession. Let's go talk to them.
I am not concerned about a recession. I am actually very bullish on the real estate market. And this, of course, depends on which market you're in. I'm in the Sun Belt, lower southeast part of the country, from Texas across to Alabama. And I see positive movement in each of those markets, from job growth to job production to new houses coming online to demand for the homes themselves. So I think both home price and rent appreciation is possible in those markets in 2024.
It's hard for me to say. A lot of people say we're in one now. I think we're just focused on exactly what we're doing, and that's with foreclosures, and we're seeing a big uptick in foreclosures. So with that said, we're just kind of head down, continuing to do what we do, and in closing deals, we are staying really busy. And as I said, the foreclosures are going up, which can lead to or indicate a recession perhaps. It's part of one of the variables, but we're not very affected and we're not letting it affect us. How do you feel, Marcus?
No, I totally agree. A lot of people are thinking that we're in a recession today, but it can make it a little bit worse next year. But if it does, foreclosures are going to go up, make more buying opportunities for our business, but also more people we can help.
We just saved someone last week. She didn't even know there was an actual sale date on her property. We were able to identify that there was in fact a sale date that she wasn't aware of, and we were able to put a purchase agreement in place, request an extension for the sale, which wasn't granted, but we were in position to close on it prior to the sale, and she walked away with $108,000. Had we not made contact with her, she very likely would have gotten nothing. So that's one example. And a lot of other instances, we're able to keep people on their property by stopping the foreclosure. Other time, it's just letting them cash out on some of their equity versus just letting the bank take it. That's the primary, in a nutshell, how I would explain it.
I think it's been overall pretty challenging from what I know. I'm not in the acquisition team, so I can only see by how much our company has grown. We do have, we're lucky one of the companies to have the capital, but I think that the deals were it's really hard to pencil. And so we haven't really acquired much in this year. And I think everybody was just a little bit more cautious in 2023, but very hopeful for the upcoming year.
Not only are we not backing out, this is a year really for us, I wouldn't call it doubling down, but we are planning to up the number of properties we purchase in 2024 from 2023. So we're definitely looking for growth in 2024. We feel like the market we're positioned right, and so we're ready to go.
We've had a motto that we've been using is survive to 25. And so we are just looking at, how can you secure longer term debt options? If it is something that is on short term or we can sell, we're looking at that and trimming the portfolio now because we believe that it's going to probably get worse before it gets better. I think primarily commercial real estate is going to experience the largest issues on that. And I think multifamily even applies to that just because we have so many interest rates that have gone up and blown out interest. Insurance premiums are absurd right now. Property taxes are resetting on these new values. And so it has been a trifecta of interest rates, construction prices, insurance prices, and property taxes. And all of that is really hindering higher end commercial and multifamily properties, as well as office buildings. All of those are all experiencing the same thing, and they can't move into a refinance. Because of that, you're going to see distressed real estate. You're going to see office buildings that are trading at 20% discounts to where they were, and some of them maybe even 30 or 40% off of its peak prices. I see a lot of that in multifamily that were darlings at really low cap rates. With 7% interest rates, cap rates need to also expand, and that is blowing up a lot of deals. And I think you're going to see distress. There's a lot of dry powder. I don't think it's extreme. I don't think it's something like an 2008 collapse. I think it's a softer downturn, but that's very much something that is a possibility. But again, my crystal ball is broken. I wrote a book about buying distressed real estate in 2020, and then all the real estate values tripled.
Well, I hope that helped give you an idea of what a lot of other people are expecting for 2024. Again, I'm Kathy Fettke here for Bigger Pockets on the Market YouTube channel presented by Fundrise.